All right. Oh, I think we're streaming. Hang on, I gotta turn the volume down. Okay, we're good. We're streaming live.
All right. Well, today, very excited to be here. We're getting into because we just completed a refi. We're completing another refi. So what we're talking about today is the BRRRR method, is the BRRRR strategy. This is a strategy that we have used time and time again. This is the strategy that has allowed us to make the most amount of money. Um, and the best thing about the money that you actually put into your bank account from a BRRRR deal is it is tax-free money because it's not income. It is a loan. So we are going to be really dissecting the BRRRR strategy, from beginning to end. We just closed one. We got another one closing. Should be closing. I'm waiting to hear back from the title company today. Um, and that's what we're up to, everybody. There's still a market. There is still a play to do this. I feel like the temperature for the BRRRR conversation has really toned down since interest rates have increased. And probably just so everybody knows what I'm hearing, and I follow different financial sources and stuff like that, who follow like the 10-year treasury yield. It just went up yesterday. And I think rates are probably going to go up again. So it is what it is. I feel like the conversation around BRRRRs has really slowed down, just online and in general. And we're going to re-stir up this conversation because it's something we are still doing. So we're going to talk about kind of the type of properties to target to make these BRRRR transactions work, the benefits of doing the BRRRR model, and really why we love it so much. So RJ, how you doing?
Dave, do you happen to have that HUD
From
for
when we
from when we did it? Um,
uh no, I don't.
okay. Okay. So let me give you some context to why we're talking about this. So not only interest rates are higher, insurance rates are higher, property taxes went up. Um, and we preach and talk about, getting deals off market. And that definitely is our bread and butter. We've always found the best deals off market, but it's not to say that you can't get good deals on market. It just takes a little bit more digging around, a little bit more sifting through the many listings that are on the MLS. But what we are trying to make sure to really impress upon you guys is your numbers are going to be a lot different nowadays. You're not like we're not buying and holding as much because of those factors. Yes, interest rates have increased. We're into eights. Um, they haven't gone down. Everyone, there was a couple months ago, we saw something on the social channels that everyone's like, oh, the rates are going to be going down. They haven't gone down yet. I haven't seen it. But what I have seen is that our insurance rates went up, property taxes increased. So these deals that come around, that still can come around, they're just not that many that we used to do, let's say 17, 18, 19, right? Before the interest rates went up, before the property taxes went up, before the insurance and things went up. So we are going to be showing you, I'm going to try and look for the HUD because I'll share the screen and show you guys that we are doing deals today, you know. You want to see receipts, so I'll try and find it. But we're still making it work. This is a property actually that uh, just like you see on our socials, we borrowed private money that funded the acquisition and the rehab. That's why we like private money. We're not saying that, hard money is bad. You might have to use hard money because you don't have the relationships yet. It's okay. Um, but I want to talk to you about that too, because no one's talking about insurance rates going up. No one's talking about property taxes going up. Everyone's all focused on the interest rates. And that's not the only thing that's going up, guys. So you have to be better at underwriting and look at everything as a whole. pull out your financial calculator and not just do, principal and interest, but so your taxes and insurance. So if anybody's cracked the code on insurance and taxes, feel free to chime away in the comments because we haven't figured that out yet. Now we can go and, you know, we we have this and we've done it before. We go back and to the county and try to get a better deal on the taxes by showing them what we paid for in cash. But then when you go and refinance that, it's a different value. When you go and refinance it, your your taxes go up a little bit. So you got to be wary about that. This is like this is what's really going on. So I'm curious to see if you guys are still buying and holding in this market today, what you guys are seeing. Are you buying and holding? How are you keeping your insurance and taxes down? Because it's pushing some of these deals out. I had a deal analyzation I was doing on our fast track community, and perfectly good buy and hold property in Dayton, Ohio, in the better part of Dayton, Ohio. And we couldn't buy and hold it because the taxes just didn't make sense there. Insane amount of taxes there. So there's certain like areas in Ohio where it just can't do the buy and hold. So what do you do? Well, you better you better have a strategy to monetize it. We show you how to do that. You can wholesale or novate, or you just fix and flip it. Fix and flip and sell it to somebody that is going to live in the property you can't buy and hold, or wish. So that's what I'm seeing. And we have a property that we're going to show you here. I'm going to try and find the HUD.
I found it. I found the HUD. I'm actually just looking for the appraisal here. Give me 1 second.
But the process is still the same for us. We're still the basics of private money, and then going to we have an amazing gal that works with us under refinances. She's amazing, by the way. And if she's watching this, thank you, Rachel or Raquel. She's done a number of good things for us lately, and we're happy to pass that referral along. But that is something I want to make sure that we cover, is that we're not buying and holding as much. And I know that there's investors out there that will buy and be okay with negative cash flow, and you know they do that dance, and that's not something that we like to do. You know why? Because eventually the rates will do what they do and taxes will do it, but there's always going to be someone really, really motivated that needs our assistance, whether they're behind on taxes, and then you can still get it for a great discount, like this property that we are going to be talking to you about. There's just not going to be that many coming at you at once that we're seeing. But that's okay, because we're in this for the long game, not, get rich quick that everybody's trying to sign up for. This is a get rich eventually long game, building wealth, stacking assets. That makes sense.
What really makes this deal, so we have our numbers. I'm going to be sharing my screen in just a moment. Is we bought this property, the final appraisal before excuse me, before refinance was 165. We bought this property for $65,000. We borrowed from a private lender $95,000. Excuse me. And so the appraisal came in at 165. The bank is willing to give us a loan at 75% of that appraised value, so roughly 122. And we'll see how the numbers shake out here. The promissory note. 1 second here. So it's expensive to do these refis. Look at all these fees, origination fee. So it's not just the interest rate. There's a lot of fees involved in doing this. So the loan amount is 122,750, which is 75% roughly of 165. And then this 96,000 and change, this is going to our private lender. Because remember how I said we borrowed 95. We bought it for 65, but we borrowed 95 on this deal.
Mm-hmm. Rehab.
Rehab money. And then after fees and whatnot, so this is this we were able to cash out a small amount of 11,708. This is basically how the numbers are shaken out. So, but what made this deal a good deal is the fact that we were able to get a home run deal on it from an off market source and buy it with private money. The only way I don't think there's any way we would have been able to buy this property for 65 G's off the MLS. It would have got gobbled up immediately. We were able to buy this from a private or from a off market motivated seller, and then we had a private lender right there in our back pocket, so we could close immediately. And we had that private lender that allowed us to not only buy the property but borrow the rehab money as well. And
Mm-hmm.
that's what made this deal work. So you can see the date on this. It was just 3/29, so just a couple days ago we actually closed this particular one. And then, we're not getting rich off this deal, but it's still a good deal that we're able to add to the cash, to add to the portfolio, right?
Yep.
And cash out 11,708. We use none of our own money, and we put money in the bank. It's tax-free money.
Yep.
So these little BRRRR deals in the affordable housing sector is really where it's at. Like, you know, we love the deals that we could be all into for under 120K, and that's going to rent for anywhere from, 900 to $1,400 a month. The BRRRR strategy still works very well with those deals.
I wanted to point out, again, you guys know, when you are underwriting your deals, um, don't do not forget to add a little bit of vacancy and maintenance when you're doing that. 10 to 15% is reasonable. If you're self-managing, obviously that goes down. But the houses that we're buying, everybody, they're in the 50s, 60s, and 70s. Like, these are not newer homes, and you can rehab them as much as you can. But you got people living in them, and something's going to break. So make sure that you are, you know, be honest with yourself. Sometimes it's like you don't want to put it in there because you want to pencil things in to make it work. But then when you pull out your P&L and you look at the property, you're like, oh yeah, I forgot, they moved out, and then then you got to turn it. And I don't know about you guys, but I can't turn anything for less than 6 to 7K anymore. Uh, so, anyways, prices have gone up. Make sure that you are also taking into account. I don't know if you saw that, but there's like the 600 or 700 a year premium for insurance. Those are kind of gone. I mean, everything anymore is above 1,000. We're talking about a 3 bedroom, 1 bath, 1 story house in Whitehall. Starter home basically. So anyways, I want to point that out. So make sure that you're underwriting it in today's numbers. Talk to your insurance agent, get the real deal number, and then don't forget to put vacancy and maintenance in there when you're underwriting these to do BRRRRs.
And when you're underwriting these to do BRRRRs, this needs to be reflected into your offer with the seller. Every
Yeah.
seller wants, top dollar for their property. If you're going to do this deal and you're going to close this deal quickly and give them their money in 7 days with a private lender and do all this, you got to be making sure you're getting a great deal. You can't afford to pay too much. You make your money when you buy, you get paid when you refi or sell. Um, so
I have an interesting question. We talked about this yesterday. If with the knowledge that you have now, Dave, all right, and let's just say uh, your goal was to buy a rental in the next 90 days. Okay. Goal is buy a rental in the next 90 days. You do have access to um let's say you have access to a good deal. That's all you have. What would you do? What actions would you take to transact a deal like we just showed you within 90
mhm.
days? What would be kind of like what would be your game plan?
Excellent question. And when you say access to a deal, I assume you mean like we got a lead off market kind of as is deal that we can buy.
Yeah.
And so when I'm first looking at this deal, before I even do take any action at all, if I got 90 days to close this thing, I don't even need 90 days first off, but that's where my mind goes. And um, I'm just really verifying when RJ says a good deal, I'm looking at the rents, I'm looking at what I can buy it for, and I'm looking at how much I could rehab it for. And immediately I'm looking at, okay, I could be all into this deal for, let's call it less than 65% of the value. So my purchase and rehab amount is going to be 65% of the value after repair value or less. That's got me feeling pretty good about this deal, right? What I'm going to do is I'm going to have pictures of the property. I'm going to have a game plan on what I'm going to do for the construction for the rehab. So my rehab numbers and estimation is accurate. I'm going to be looking at not going with carpet. I'm going to be going with like LVT kind of flooring that should last a little bit longer. Um, I'm looking at Section 8 rents in the area as well, just as part of my own due diligence, and that really helps you sell a deal. Because what I'm doing here is compiling data, because I'm going to put this in front of a private lender, and I'm going to put it in front of a private lender in such a way where it's the most no brainer, excuse me, no brainer deal that any of us have ever seen. So I know what I'm getting, a great deal purchase price. I know what my rehab numbers are, and I'm looking at like long-term materials, not just like lipstick on a pig. I'm thinking new mechanicals, new roof, new windows. Those are the biggies. And then I'm looking for like more permanent style flooring, um, bathrooms and vanities and cabinets. This is like, I want this thing to look really good. So I'm factoring all that in. And then I am probably reaching out to my Rolodex to be completely upfront with you. And I'm just starting to send text messages. RJ and I have raised more money through text messages than we have with anything else through social media posts. That's a true statement right there. We have raised more money with text messages than we ever have with social media posts. And what I would do is do a text to just check the temperature. And I would text all of my buyers, anyone I know who has money. It doesn't have to be like a seasoned lender. It's actually sometimes better if it's not a seasoned lender. But I would do a general little text like, hey, um, I like to like look at what's going on in the month, So it was just Easter. Hey, hope you had a great Easter. If you know something personal, if you know their little baby's name is, Lua, you say, I hope Lua's doing good. Um, I'm looking at this real estate, I'm looking at this house valued at 130. I can be all in for call it, 75,000. um would you like to look at this? That's it. Like I would give a general landscape. I would check in on them personally, but then I would also say things are going great. You want a positive message of like things are going great. In fact, I just found this deal worth 130 that I'm going to be all into for 75K. People think these deals don't exist, but they do. Do you want to look at this with me? That's it. That's so I just want to check the temperature, but I want to send that text, make it personal, make it positive to like 100 people. I want to send it to even people you don't think are like money players. It's okay. Um, and that's
Okay.
what I would do, RJ. So then I would look to get a private lender interested, just who wants to look at this with me. But then I have all my data. Like, look, this is the value. This is the ARV comms. This is all. This is what I'm buying it for, which is much less. Here's my scope of work. And then what I like to do is like, here's the Section 8 numbers. Look, even if we rented this for Section 8, the Section 8 numbers are very high. So yes, insurance and taxes are going up, but the good news is the Section 8 numbers are good too. So that could really help you sell your deal to a private lender. And then I would get this private lender and I would really, let them know that their money is going to be secured in first position with a note and mortgage. And then even offer, we typically don't offer this, but if you're a student of ours, I would tell you, I'm going to personally guarantee this, and I'll secure it with my own assets and my own bank account too. I'm personally guaranteeing this thing, so I can't skip out or anything like that. And I would look to pay the private lender 10 or 12% on their money. And it's 12% seems to like be the number right now, RJ, to like get people's attention. People are excited about. And it's kind of a no-brainer deal. If somebody has the cash, you're showing them the value, you're showing them the work you're going to do to it. Um, it's really good to have your contractor or lined up as well. And if you don't have pictures of previous projects that you have done completed for your portfolio, have the contractor send pictures of their previous jobs. That's how we got the money for Berkeley. Remember, RJ? We didn't, that was our first time working with that contractor, but we shared pictures of their previous work, and
Yep.
that it helps. So I would raise the money, and then the private lender is going to wire the money to the title company. That's the money you're going to use to purchase this. You're going to sign your note and mortgage there at the title company. Now you own the house, and that rehab money is released to you from the title company, and you get to work. You get this thing fixed up, and you got to get it rented as soon as humanly possible. And I would be looking to start the refi process as soon as you close on the house as well, because the lender who's going to refi you is likely going to need bank statements and tax returns and this, just the common things that a lender is going to need. So I would get started on that right away. And that's kind of like the timeline of this deal.
So who is going to be like, how are you going to manage the rehab?
I
How
would
would,
do it myself. I would manage. I'd pay in draws, and every rehab's a little bit different. But I would want to get started on this rehab immediately. Ideally, the property is vacant when you buy it. Day one, as soon as the ink dries on that paperwork that you bought the house, ideally we want to get our contractor started immediately.
okay. So you're managing the rehab and draws it like you secured a private lender. Now you go to closing, and you secured, a crew, right? And your plan is to pay, um, the manager of the rehab and draws. And let's say the crew that you know, picked out wants half up front. What happens then?
Ideally, you want to work with a crew who's going to get started, and you're going to kind of pay when the work is complete. You can pay in draws, um, but you want to avoid paying upfront if possible.
Okay. All right. So
There's
then
and there's a lot, and just so you know, we've been on these live streams before, and our good friends, they like to chime in on here and say no contractor will ever do that and this, that, and the other. Here to let you know, there's a lot that will.
yeah,
A lot
there
of
are.
quality business minded individuals who absolutely will work with you where you're not paying up front.
Okay, so you managed the rehab and draws. After the rehab, you're in your last, leg on the rehab. Then what? You gotta get it rented, right? So are you gonna rent it yourself? You gonna have the property? You have a property manager?
That's up to the investor. If you're asking me personally, I would look to get it rented myself. Even if I'm working with a third party property manager, I would look to create an arrangement with them where I could get things rented myself to avoid paying a lease up fee. So if you can do, because it's not that hard to get a property rented. So even if I was working with a third party property manager to manage these payments and manage the tenant, I would look to have an arrangement with them where I can still get things rented myself.
Gotcha. So where would you find where would you find property managers?
I mean, just through property managers are kind of a dime a dozen. You know, they're all over the place. I think the best place to find a property manager is from another investor who you know is successful. They own some rental properties already. They're currently working with somebody. So I think through the network would be better. I mean, if anyone does a post out on any social media group or something like that, like looking for a property manager, they're probably going to get like 15 replies. There's the good, bad, and the ugly when it comes to property management. We've experienced it all. So I think the best way to get some property managers in front of you is going to be through networking with other successful investors who own at least maybe 10 properties or so. And you should probably have that lined up before you close the deal too.
Okay, so now we got, the rehab's done. Um, you're gonna be finding tenants yourself, right? Um, and then that's loud. So you're finding tenants yourself, but you also have a property manager that is going to be, because you're not managing it yourself, right?
I mean, the current arrangement that we have is like that. A manager is going to handle the payments and the rent collection. I would work it out with the manager to do the leasing and the rehab.
Okay, cool. Finding tenants, you're gonna find a tenant yourself, then you found the tenant, and then you're gonna be working with the property manager. Okay. So when does the refi happen? What are you planning on refining this, right?
Yeah. So to get the refi done, we need a bona fide lease in hand. The person needs to not even actually be moved in, but you need a signed lease in your hand to submit with your closing paperwork when you're doing the refi. But you could still preemptively get the loan officer or the bank all of the mortgage qualification stuff. You should have that underway.
When would you start,
What's that?
when would you start that process?
I mean, you can start it before you even buy the house. You can get started working with a like a mortgage broker, loan officer, to build that relationship. They're going to be part of your power team. You know, this ideally is not the only one you're going to do with them. So you want to get them all of your info and whatnot. And the cool thing is when you're working with like one solid person, after you submit all your info on this first deal, you could they you could kind of rinse and repeat. Now it's a matter of getting out there and finding more deals. Because they got all your stuff on file, you could keep the train moving. So you got the property leased. Property's been fixed. Property's been leased. The lender is going to require an appraisal. So this is the big moment, the moment of truth, because this is where you get to see if your opinion of the ARV when you were originally buying it is accurate. So when that appraisal happens, anytime you're doing a refi, you want to make sure there's the rehab, you don't have a bunch of rehab crap laying all over the place. It's got to look good. It's got to smell good. This is important. And if there's a tenant living in there, you want to, you know, orchestrate this with your tenant. Make sure their place is clean, looking clean, smelling clean, because this appraisal is going to make or break your deal. Because remember, the bank is only going to give you 75% of that appraised value. So if the appraisal comes in low, you run the risk of not being able to borrow enough to pay off your private lender. So this is the dance right here. This is the most important part, I feel, is that appraisal.
It's so important. So here's some of the strategies that if they're rented and the tenants have moved in, and maybe they just moved in, is that you just let them know, like, hey, we're sending an appraiser in because we're doing an appraisal. If you could, please, we could send our cleanup people in at no charge for you. You get a, house clean on our end for free. Or if you want to do that yourself, great. Some people just want to do it themselves. That's how people are. But prior to that inspection, you're going to know because your loan officer is going to be coordinating with you. The appraiser is going to give you a call, and then you're going to schedule that walkthrough with them. So you'll have 24-hour notice to make sure that the tenants that are living there can clean up the place. So let's just say, they have pets, and
Yep.
we don't like that, but it's people, and then they'll have pets. Just make sure that they cleaned up after themselves. It smells good in the house, and we will actually pay for a cleaner. Little things like that makes a difference. Um, Another big thing is you got to be nice to these appraisers. You want to be their friends. Let's put it that way.
100%.
Okay. Um, so then, like we just showed you with our paperwork, a refinance, happens, and it's like a closing.
Yeah.
Make sure that you get the preliminary HUD in advance, before the closing, so that you can take a look at your receipt. Basically, that's a good part about real estate is you can see the receipt, and then that's the HUD, and then you can see what you're paying, what's coming net to you. And sometimes we've seen some stuff on the HUDs that shouldn't even be there. So pay attention to that kind of stuff. And if it's your first go around and you need some help with, kind of reading that, um, this is what this group is for. Show up to these live streams, ask those questions, post the questions in here if you need help with that. Because I definitely needed help with that. And you know who I called? Because I called the title company. I'm like, hey, I don't understand this, and this. What is all this? Why do I gotta pay this? And then you just ask and you learn, right? So,
Yeah.
but it's key to not ask at the closing table. Make sure you get that preliminary HUD, minimum 48 hours, so that they can make um, the changes if there's something on there that shouldn't be on there.
Yeah. I mean, we've run into instances where we didn't get a preliminary HUD and we got all the way to the closing table and ended up not doing the deal because the numbers didn't shake out where we thought they would. This it does happen. So that relationship with the title company is key. And then you kind of feel bad because everybody works so hard on this, but it's like you got to see those preliminary numbers before we take this thing to the closing table. It sounds fundamental, but it doesn't always happen when everybody's running around busy. You got to make sure you're observing the numbers before the closing table.
So if you're looking at this live and you want to take a screenshot, this is basically the framework of how to buy a rental in the next 90 days. If you have a renovation that is bigger than, I don't know, 40, 50K, just know that it might take more than 90 days. Might take 120 days. If 60 to 70, 80K rehab, it's going to push you longer because dealing with contractors, and they're not only working on your property. Now, if you're rehabbing it yourself, it's a whole different thing. I don't recommend that. Um, but there's a lot of contractors in our network that can do the rehab themselves. Amazing. That's great. So take a screenshot at this. This is your little framework of how to buy a rental in 90 days. And if you have any questions about this, if you're seeing this live stream later, reach out. If you need more help, reach out. So anyways, it's that is our live stream today. If you have any questions, put them in the comments. We can do some Q&A. If not, you don't have any questions and we explained it thoroughly. Awesome. Cool. Are you seeing any questions in here, Dave? See if
I'm not.
okay.
I got let me see here. I was taking a screenshot of that as well. As a matter of fact, everybody should. Um,
What's up, Billy? I see you in the comments. Guys, if there's any topics, I'm gonna do another poll. You guys had mentioned that private money was a big topic for you guys. We did a live stream on private money. That was last week's. We're gonna get that recording. I think it is somewhere in our Zoom. We're gonna put that recording here. And then the next topic that you guys wanted to talk about was buy and hold. So if there's anything that you see, anything that's like kind of holding you back on moving forward with where you're at right now in your business, real estate business specifically, let us know, whatever it may be. And we can take your topic and do a live stream. There was a really good question the other day, Dave, from Sean. And he was asking, anyone want to walk me through how to invest out of a retirement account? So that might be a topic we can take because we have those type of conversations all the time with private lenders, show them what to do so that they can start self-directing. So that might be something we could do in a live stream. But any topics that you guys are needing help with, reach out to us. Use the group. There's a lot of activity in our group. This one and another one, but this is specifically for people that want to grow their real estate business or starting their real estate business. Any last thoughts to close this up, Dave?
yeah, just consistency is the key. This is what we were kind of talking about with our own team here. Anything is possible with patience and discipline. Often is more important than smarts. You could be so smart, you could know all the terms, you could read all the books. If you're disciplined with taking consistent action and then patient, keep showing up, you will be successful. And we're here for you every step of the way. So yeah, it's been a good live stream, everybody, and we'll see you on the next one.
You guys.